Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, June 25th, 2024. Today, it was a pretty good trading day, but disappointing as well. I'm showing you, this is the spiders right here, and I'll go back to the SPX, which I normally show, but I wanted to be able to show you how the software that the combination of different AI softwares that I use and how things set up. So here you can see this is just a 5-minute chart on the S&P. So you can see right here we're trading, we're on a sell signal with the trend. You can see the volume is going sell, 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 sell. And we came down, and here's the first buy that we got. Now the way that I do this is I need at least two of the indicators to 2 out of 3 to be on a buy signal, and when all three are on a buy signal, then you just kind of let it run. So we had the buys. I ignored them. This was where we took the trade. And what it really was you had a buy signal here. We are above the trend line. And you can see just at the Arun, this gave us a buy signal here as well. So we took a straddle trade, and what I did is I did the on the S&P is so I use this as the indicator because for some reason the S&P 500, the SPX does not show up with this software, so I'm a little confused on it. But in any case, let me show you what happened. So this was let me go to a 5-minute chart on the S&P. So this was right about where we got long, right around this 5440. And what we did was basically took the 5460 calls and the 5425 puts. Now I did that because I was leaning more on the upside than the downside, so I wanted to pay less for the puts on it. So we got in, and it was pretty fast how quick we were in the green on this. And my upside target that I told members, where I was closing the call side of the trade, was at 54.90, and you can see we made it to 54.91. So we were cash here, or not cash, the calls were out. And we did pretty good. And basically, when you take these straddle trades, one of them is going to be sacrifice, meaning that the market's not going to typically, because I'm going to show you it does do it, doesn't go up and down that much on it. So basically we took the 5460s, closed them up here, and then when we started coming down, the put side that was going for 50 cents. So I had 10 contracts, so that's $500. It's like, I'd rather just wait and see what happens. And when it came down to this 54.45, they were giving us $1.70 for them. So I said, I'm going to close out the put side. And we made some pretty good money on it. It was we made $14,350 on the trade on today. But the thing is that where I say it was disappointing was I could have held on to those puts, and they would have been worth 25 points. It's $25. So in reality, this trade right here could have easily been $40,000 that we would have made for a $12,000 investment. So I was kicking myself a little bit, and I even put that in the text where I said I'm probably gonna, this is gonna come back to bite me in the butt, but I'm gonna take the $1.70. Yeah, obviously that didn't work out, right? And it came down, but you know what? We still made for 10 contracts we made 14,000. So let's go back to the IWM. So here, again, just explaining this software, we were getting the buy signals. Once we got into the trend, this is 2. So I could have taken at the 540, or I believe, let me just see something. That's right at 1045. So at 1045, let me zoom in a little bit. 1045. So basically, I could have gotten long right here at the 54.30 because we had a buy signal, and that's going off of the spiders. We're above the trending thing here, and we had a buy signal on the Arun. So that's really the way that I've been making these trades. I'm not trying to guess tops or bottoms. And when we get to a certain point, I put a market neutral trade on, meaning that if we go long, instead of just going long and then having something like this happen, we go long the calls and long the puts. And we just need the S&P to move more than what we paid for both of them, which I kind of had a feeling it was going to do that, and that's why I took these. Once volatility slows down, and then we start getting into the credit spreads. That's really the way this is. But right now, volatility's there. There's a lot more money to be made on the, doing these straddles, especially with the volatility that we're getting right now. And that's what you saw in the, today's trade, that $14,000 profit that could have been 40. I'm getting angry again at myself on it. But in any case, it worked. But so now let's go back to the spiders and see what did this do on the downside. So here, you can see that once they broke through the trend, we're below these purple lines here. This was where you take profits or you get out of your long trades, and it's pretty. You can see it was at 545, and we were looking to get in at the 5,400. But in any case, this went to a sell here. You can see the Arun went onto a sell here. So this would have been the 2 points that I'm looking for, 2 out of the 3. And you really got short at the 544. And you can see the sell volumes. We got one buy. This was the trigger right here, but then we got a sell again. And you can see we had it. This was the head fake right here. But if you notice, we're above it. But as soon as we got above it, we got this. We got the sell signal, and then we got another sell signal. And here you can see the runes on a sell. We were on a sell with the trend. So in reality, that's your point 1. This is your point 2. So we could have gone short. I just didn't. Like I said, I was kind of thinking that we were going to make it up to the 5,500, 5,520, but it didn't do that. So in any case, let's go take a look at the 15-minute chart here. And you can see that when we're here, the Arun gave us the buy signal, but we were already up here. And if you notice right here, once we had these buy triggers right here, so volume was big on this. Once we got above the, where the trending was up, so you're looking at 542 up to 547. So 50 points on the S&P, 5 on this. The sell signal did not come in until the last really 15 minutes of trading. We had big volume. But again, I wouldn't have taken this because if you notice, we didn't have any sell signals when we were coming down. Arun was still in a bullish stage, but the market kept going. So once I don't take the trades if there's just the trend indicator that's saying on the short side until I get 2 out of 3, and the 2 out of 3 didn't come, so there was no short position that was taken. But this is how powerful these tools are when you combine them together, and they're really not. It kind of takes the thinking out of it, and that's kind of what I like. So here's the deal with the S&P. Let's go to a 15-minute chart here so we can get an idea of what's going on, because the bulls are sick right now. They are not well. So if the bears can push it through this 53.88 level, we got to go all the way to the 60-minute chart. And here you can see we have a 62% retracement at 53.76. So this would be really the line in the sand for the bulls, because if they lose it, we have support right here at 53.35. But really, the way that I would be looking at it, if we take out these lows, then I'm really looking at a move coming down to the 78% retracement, which is it's going to bring us down to that 5,300. So this is the support zone from the right around that 53.81 down to the 52.94. It's a big zone, hard to do it, but you can see this is the resistance I put in. We made it right up to it and then came back down again. So I think this market's sick right now. There's nobody that's really looking to buy, and any short squeezes are getting sold. So I'm just staying open-minded with this. And I believe that if we do continue to see this type of thing, then the next target is going to be probably down here at the 5505. That's the spiders. Hang on one second. SPX. Okay, so basically, I believe we're coming down to the 50.45, but as far as Elliott wave wise, it'd be looking for a move coming down to the 5,000. So I don't believe we're going straight down. There's support right here at 52.45 if we continue down. There's also support right here at the 53.44. And really, that's about it. After that, we're coming down here. So just a 23% retracement level. Hang on, let me fix this. So just a 23% retracement from this low in October to this high brings us down to the 51.68. With this type of move, with not a whole lot of really pullbacks except for this one, seeing it come down to the 38% retracement would make a lot of sense, and from there, I think we will have enough panic in this market that it will set up for a nice move back to the upside. So let's just see what plays out tomorrow. Have a great night, and just to let you know, I have 2 more spots open for this the profit sharing thing. So if you're interested, send me an email, Gary@sentimenttiming.com, and we'll set up a Zoom call, and I'll go over everything that this profit sharing program that I have goes over. So have a great night, and I'll talk to you guys in the morning.